Hey, what's up, guys? Robert here with IKNK Traders. We've got an exciting podcast for you today. We're going to go over some juicy subjects that I'm sure a lot of you guys have been following, but we're also going to introduce Jack here, who is below, sideways. I'm not sure which way he is. And basically, anyway, I'm Robert with IKNK Traders. Been working with IKNK Traders for 5 years now. And Mike has been on the team for how long now?
4 years.
4 years. All right. And we'll introduce some of this stuff later. We want to hit these juicy subjects, mainly the race to zero commissions with some of these brokers out there. Our thoughts on that. We all got different perspectives on there. Also, the market kind of just overall, there's been a lot of crazy stuff happening. And we have Michael here, who is a stock small cap trader. And we have Jack here, who is a futures trader. So, Mike, let's just start with you.
Yeah, buddy.
Yeah.
So I've been with IKNK 4 years, guys. Basically the one in chat. You'll see in chat doing the live stream lately, just showing you my style, mostly focused on small caps, mid caps, and some of these ETFs lately when the overall market has been definitely super volatile. And that's my niche. And then Jack, if you want to give a little 2 cents on your take on the market, what you focus on.
Yeah. Hey guys. I'm Jack Gleason here with the IKNK trading team, and I'm going to be talking about futures. So I actually trade futures. Now, me and Mike have been going back and forth like just as trader friends for about like 2 years. Same thing with Rob. The whole internet trading world is pretty small. Everybody kind of sees who's good, who's real. You kind of get a taste of who you want to associate yourself with. And I'm happy to be on here with these guys. They invited me on, but I specifically trade futures. And that's one of the things that I know that the IKNK community hasn't really been introduced to yet. And I'm really excited to shed some light on what are futures, some of the advantages of futures, also talk about some of the moves that we've been having that really are starting in the futures markets. One of the things that people don't realize is the biggest moves actually begin in the overnight session, and that's when the markets close. Stock traders aren't always able to take advantage of that, especially past, I think the close is at 8 p.m.
Yeah.
But futures is rolling all night long, and hopefully it can shed some light on how you guys can take advantage of that and maybe start dabbling in the futures market. So that's what I got to show you guys here today, and like Robert said, we'll be talking about the rest of it.
Yeah. I got to say, I'm very intrigued myself. I've always been kind of intrigued with futures.
Dude.
Yeah, kind of. Every trader has a kind of a crazy journey that they have of like, what should they do and this and that. And so, yeah, definitely, Jack, appreciate. We just really want to shed light on futures, what they are, and why you should know what they are. And so as we're doing this podcast, I'm imagining that I'm going to learn a lot. So I hope you guys learn a lot as well. Cool. Let's start just kind of, we're going to get to the broker zero commission stuff soon. I know you guys want to hear about that. But let's just kind of start with just the overall market, what kind of we've been seeing, and the characteristics of it. From my 6 years of following the market closely, kind of haven't seen anything like this. Not that it should always be the same, but it's definitely different. So, let's start with kind of that. Who wants to go first? Mike?
Yeah, I'll take it.
All right.
Screen share just quick, just to kind of show everyone, a little bit of a visual. But, when I trade the overall market, and most technical traders, I guess, and Jack as well, when I look at SPY, I'm just looking at key levels. And anyone that knows how to read a chart, we've obviously been super toppy at 302 and are over 3. And, we've seen this pattern before where it's mostly just a lot of negative media. It's just some trade war, this, I guess, a whole list of stuff that really, half tweets, really, midday tweets that you really have to be super reactive on, or you can get crushed. But anyone that can read a chart, was looking at, I guess, 294, 295, Jack, if you can, confirm, once that broke, then I guess you could really look at 290 to 280. And I just focus on trading the VIX accordingly. But my limitation, which is why I'm going to learn just as much from Jack as Rob probably, is, when the market's closed and you see all this news and you're just like, if you're ever in any of the VIX or anything overnight, especially a levered ETF, you're going to get crushed, you know? So the risk, it's very difficult, in my opinion, to capitalize on the overall market in stocks as much as you can in futures, which is why I think, Jack, if you want to give a little 2 cents on that, you know?
Yeah, I'll go ahead. And so before I go ahead and share my screen, so Mike is showing the SPY here, and I'm constantly quoting what's called the ES. So the ES is known as the futures market, the S&P 500 futures market. So I'm going to take over the screen share, and I'm going to show you guys what that looks like. I think you're going to have to, okay, you ended that. Cool. And one of the things I also want to go over real quickly, guys, this is just a news calendar. What started this move down was on the PMI numbers was a huge miss. What was it?
Yeah.
PMI on Monday, and then Tuesday it was
That's manufacturing.
Yeah, ISM manufacturing was also a huge miss. So those are some pretty big bellwether economic events or numbers that like institutions look at. Now, I'm not a person that ever, and I don't think anybody really should be like blame the news for the market, the way the market's moving. I've never been one to, I got screwed on that. Like, the news is just always going to be there. It's always going to be a factor. But I do agree with Robert's comment that this is one of the most interesting markets I've ever seen, where there's so many headlines that are constantly affecting price in a drastic way. Now, I'm still a technical trader. I'm not a fundamental trader. I'm not looking at these numbers and making an opinion over the next 3 months, but there's institutions and hedge funds that see these numbers come out that are huge misses and are anticipating all sorts of Fed policy changes, and that's what's really driving these multi-day rallies and sell-offs that, as traders, we need to be aware of and participate on. So what you're looking at on my screen at this point in time is a chart of the S&P 500. And if I just went here and turned off the extended session, so this means all of these gaps that you now see in the price are everything that happened in the overnight session. So you can see the difference between this chart that you have right in front of you, and then if I turn the extended session on, there's a huge difference, right? There's really no gaps in price.
Wow.
So I mean, you're missing half of the picture if you're not looking at that data. About the only time you get a gap is Sunday night gaps, which are pretty rare. There's one here, but like you don't see many gaps on this chart. And we'll just go to today specifically. Yeah, I mean right? It's like once you look, you're like, wow, man, nobody told me this. And even the SPY, like there's a little bit of trading that goes on before and after the cash close, but it's really low volume. It's very there's still gaps from like 15-minute bars and stuff. So always be looking at. I think people should start getting the habit, even if you're a stock trader and you trade the SPY, you should get in a habit of looking at the S&P futures chart. And this is a chart of those futures. But you can see yesterday was this close here at 29.38, and then we opened at 29.23. So about like a 15-point gap down in the overnight session. That's what's called a professional gap. A professional gap is any gap greater than 10 points. Gaps greater than 10 points, especially when you're breaking down and out of larger support levels or resistance levels, have a tendency to just continue to run in that direction all day long, which is really what you saw here. And then, I know Mike, I had the same trend line up. Mike does, you'll be looking at the same technical patterns, regardless of what you trade. I'm sure you could learn things from any one of us that are going to be effective tactical strategies. But, really just looking at the futures market is going to give you a little more evidence than the rest of it. How I trade, a lot of what I do is Fibonacci based. So it's mathematical, just patterns. You guys probably heard of fibs.
Yep.
Some people use them differently. Mike, do you trade with fibs at all?
I use fibs all the time, yeah.
Yeah. Rob, how are you?
No. I occasionally put them on the chart, consult with it, but I don't, and leave them there permanently. Try to keep it as clean as possible, but might try it.
Yeah.
Okay. So we had, just to kind of give you a little breakdown, like most of what I do from the technical perspective, but like my entries are typically on a 50% retracement. So we had this last swing high. We had futures rollover, which happens 4 times a year. A lot of times you'll notice that we actually, after rollover happens, there's a reversal in the market. That's also something that traders should be aware of, because what happens is we roll from one contract to the next. So we have the September contract expiring, rolling into the December contract. And a lot of times hedge funds, because liquidity goes out of the September contract and begins into the December contract. That's what we had, during quad witching week. People call it that as well, where SPY goes ex-dividend. You got options expiring, futures rollover, and then I forgot what the other one is. But
Can I stop you there for a second?
yeah.
So with the, I hear that all the time. Do I pay attention to it? Not really with active day trading. Maybe I should, maybe I shouldn't. Can you explain a little bit more with the rollover, what kind of effects you can see and when? I would imagine it's like, it towards the last month of the last week of the month, you'll start.
Mm-hmm. Yeah. Okay. So let's just take every one of these green lines here that goes up and down across my screen represents a rollover.
Okay.
Rollover happens September. So September, we roll to December, and then the December contract expires. We roll to the March contract. The March contract expires in March. We roll to the June, and then June to September. So there's 4 times a year. And you can actually see on these green lines, so this is the March to June rollover right here. And that March to June, that was the low of the summer, the first day that contract opened. So what I would say to traders who are, want to be aware of these levels and how you could trade them is that, say you're looking for a double bottom pattern, or maybe you're looking for a support retest, here, you could call this as a support retest, that those levels are going to be more effective for a multi-day trend around rollover. So it's a really important day for a potential entry into a swing trend. I mean, you see here's the rollover into the December contract last year. Do you guys remember December destruction? As soon as
that was the craziest freaking action I've seen in a while.
I mean, here I am trying to enjoy my Christmas, eat a nice
the day before, right? The day before.
Yeah, that was the low. The 24th was the low. Actually, the low was in the after hours. The low was in the after hours. I mean, that day coming out, it was
How about the bounce though, man? That was even crazier.
It's a 161 point range in the S&P 500. For example, the average true range of the S&P right now is 35 points, and that was 160 something. So call it 4 times or more than that.
So when that day happened, Jack, what I look for, just add on the 2 different perspectives in equities, is I'm looking at the levered ETFs, and I'm looking to short them on the reversal. I'll never forget. It was SQQQ, but they reverse split a bunch of times, but it dropped it ran up for a week, and then when they pulled the carpet, it dropped 5 points in 2 days or something like that. And it was a $20 stock, I think.
Wow.
Yeah.
Wow. Yeah. So 25% down. If you think about it, one of the hardest things to trade, everyone always says, "Oh, hold your winners," right? So easy, right? But what if there was a couple days a year you should really look to hold your winners, or around that time frame?
Yep. I agree.
And that's what's really important here. The take home, because we can range at any point in time, but there's futures rollover, options expiration. There's a couple of really big days that you as a trader need to be consistently aware of, that if you're in a position and it's going your way, maybe you just get rid of your target. Forget about your target. Start trailing your stop.
Especially when the move was so dramatic before. I think when the more extreme the drop, you have to let that, if whatever direction you're playing, if the bounce, you have to let that ride, right? Even in stocks, when you have an extreme move.
Mm-hmm. I mean, you're catching everybody. I mean, oil has been slaughtered here lately, but that's especially, to me, the index reversal to the long side is one of the best trades in the market.
Yeah.
Because generally the market, I don't care if you're if you're a perma bear, I feel bad for you. The market mathematically goes up, right? We can all, to pull back, but the monetary system continues to expand. I mean, we've been making new all-time highs every year since 2009.
And also, if rates go down, what else is going to happen? Market structure-wise, stocks are just going to go up because of that. Mm-hmm. If they don't, then I think that's when we worry, right?
Yeah, exactly. That's when we worry. But it's like you can still the moves to the downside are just they're faster, they're harder.
Yeah.
But the moves to the upside, they last longer.
Yeah, I agree. The downside is short lived, which is why I was saying to Rob, I'm looking to BTFD hard after this drop. We'll see that. We'll see.
Yeah.
Yeah, I got my BTFD level right at like 28.36 if we can get down here. This is well, I mean, I think we got some heavy room to sell. Let me just go over. I'm just going to go over today's action in the futures market, starting from the breakdown, and then I'll get off this screen share. Let me get rid of these studies. It'll be a little easier to see. Go to a 5-minute chart. So when we come into a big halfway back short, and this is for you guys who like technicals, when we come into a big halfway back short like this, my target is this green line. So it's a negative 23% profit target. And you can see we tested this level multiple times, but really it was the ISM numbers and things that really got the market going. And I'm actually going to have to go to a tick chart because this stuff happens so fast. I go to a tick chart, not even a time frame. Because
I was going to ask if you use those because
you can't see the move unless you go to a tick chart when the moves are so fast because there's just one bar and you can't see what's going on in between.
So just so everyone out there knows, the different types of what he's saying here, if you're new, is a tick chart. Basically, every order, right, is a candle.
Every order is a tick, and then so it can be a candle. If you're using strictly like one tick chart, every order is a candle. This would be a 1600 tick chart, so this would be 1600 separate trades would be one candle. But
and with what we orders, you'll see on ours, you'll see 1 minute bars. So as that minute is going, on the 1 minute, basically it'll fluctuate, and you'll see it move. So so as that's moving within that minute, you're not going to see all that movement right in front of your face. So yes, there's the wicks and all that, but basically this is much more of every order is, you see it. So I just wanted to get that out there so people understand.
Mm-hmm. Yeah, they're really helpful when things are moving super fast. But the breakdown began 9:45 were the time of those numbers, and like basically that's exactly when we lost it. So this is like a perfect technical sequence of like what would I consider an algorithm that I follow. So halfway back, the entry is to 50%, and then we blow through profit target. So that'd be through this negative 23, through this negative 61. And when that happens, this is something that really not a lot of people teach, that I'm excited to share with these guys because of my guys, is this low to low sequence. So we actually will start programs, we'll begin aggressively selling because we've gone so far through targets that the low to low actually begins trading. So most people just take a high to low and they don't know to draw a low to low, but you can see that low to low, we go right into that 50% retracement.
Yeah, that's interesting.
And then we tag it literally, and these are futures. So this is the most liquid market. This is the most liquid futures market right here for an index in the world, the S&P 500. And then once again, we go through that target, that negative 61, and then we go low to low again. And then that's when we start getting front run aggressively. I'll show you this all the way to the bottom. This is low to low, come up to the 38.2 and the 50, the two levels I watch. If we don't get through this red line, this is called the same anchor new low. And I know this is a lot to take in over a video. Same anchor new low. That trades in the overnight session. Then you can see we blow through that red line. Market goes low to low. We blow through that red line. Market goes low to low. We blow through that red line. Market goes low to low.
The sell-off was so consistent, I feel like, right? The past.
Just hammered, dude.
Right?
It was one of this is like one of the more perfect examples you'll see of this type of pattern play out because it was so consistent. But I just wanted to kind of show that's how technical the futures can be when you know like what patterns to be trading on it. But I just wanted to show you guys that. I'll cut off the screen share before we get too lost in the numbers.
Yeah, I definitely. So I just want to make one point, guys. And the reason why Jack is here, everything that he said as technical traders is applicable to stocks, and
Yep.
pretty much vice versa, right? So
I do the same thing with fibs, with retracements, and
and that's what we're going to keep doing, and we'll get into some of that stuff we got planned in the future. So yeah, it's not like either or here. There's a lot you can learn that'll help you on both here. So with both these guys here, explaining everything. So yeah, let's move on to the commission zero. The race to zero commissions, where it started in your guys' mind. I just read that recently Schwab is doing $0 or whatever. I don't really care. But if any of you guys have more detail about how you think this kind of started and where it's going.
I think Mike's got the best idea.
I started with Robinhood.
Yeah.
Right? And then all they do is sell your orders. If anyone wants to really get technical, go get the book Flash Boys. I don't know if you read that, Jack.
Yeah.
That book is like, just like so opens your mind to just how the market really works. And they sell your orders. So as stock traders, if you trade at any type of direct routing broker, you're going to pay usually at or about 0.003 per share. Most people don't know this. If you provide liquidity, you get paid 0.003. So by doing free commissions, they take that away from you, that rebate, and they also sell your orders on the backside. And it takes milliseconds. And Jack, you can elaborate on this too, for these high frequency traders to use that for even with these small caps lately. I've seen 8 decimal orders.
Wow.
And people don't realize that they're just focused on the volume. Will it hurt people in the short term? Maybe most people won't know, but I guess it's mostly about margins too, which is why those stocks drop, because they hope people trade more, but revs take a hit initially. If you look at Schwab and E-Trade and all of them.
Oh my gosh, those stocks got hammered. Yeah, not to get like too technical into it, but the difference between like stocks and futures in this specific instance is stocks are a fractured exchange market, meaning there's like, multiple exchanges that you could trade on. So just because you're trying to buy one stock, you can go to 15 different grocery stores, right? So, but if one grocery store only has like 5 of one product and the other has 10, what happens is the HFTs, how they work, they see you buy the 5 at Walmart, they run over to Kmart and they buy the next 10, and then they sell them back to you because they know what you're coming for. And that's what happens when you have a fractured exchange market. So that's all of the front running in HFT. Like HFT, high frequency trading, algorithmic trading will always be a thing.
Yeah.
But futures is one central exchange per product. So like the CME owns the ES, which is the S&P 500. That's the only place you can trade. Is there HFT in the futures market? Absolutely. But there's not a fragmented exchange where you're getting order front runs. So that all led to the back selling of the order flow, which was originally Robinhood, which is great. If you're a long-term investor and you just want to buy one stock at a time.
Yeah, right. Then it's perfect for you.
But if you're actively trading, like that's when it starts to eat away. And I also don't think it makes a huge difference if you're paying, a little bit of a share anyway. The most expensive thing you're going to do in trading is your own personal mistakes. And I talked about this a little bit with Mike earlier. We're all like, oh man, now trading is going to be free. Like, well, if you're placing 35 trades a day and it costs you like $2 or $3 to make every single trade, like that's nothing when you take a stop out for a stupid trade that broke your rules and cost you $300. Like,
it's true. It's a cost of doing business, just like the pizza man on the corner has to buy dough, right?
Mm-hmm.
The thing is, I'd rather pay a commission now and know that I'm getting quality orders versus paying free and getting shitty orders.
Yeah.
At least if you're a day trader.
That was my reaction too.
The joke is they will pay us soon. You will get paid $3, per trade. That's the joke. But watch it happen. What
I wonder if it's going to do is if it's going to create more impulsivity amongst like retail traders.
That's the goal, right?
Yeah.
Wow. That's a good point.
I think it's going to negatively affect, because people are like normally you have this barrier in your head, like I got to pay $15 to like sell this stock that I bought.
That's
like I don't want to sell
barrier,
it.
Though, right?
Yeah.
Like I people that tell me, I opened up a Robinhood because they said they were advertising they'd give me one free share in a stock. I'm like, I just look at them like, you ever heard the phrase "too good to be true"? You know, like,
Yeah.
it's the same
Yeah.
thing with the free commission thing, dude. It's like, but
I
it's definitely a good, you know, like I know Trade Zero grew popular in the equity side in the small cap world because it's zero commission. But
Through through
their
a
business
certain
model,
exchange.
yeah, through a certain exchange, and but they advertise zero commission, and you know that's a great
Mm-hmm.
marketing tactic. Is really all it is. But it leads to less revs. And again, going back to the stocks, they got crushed. And you'd think like going back to the market lately.
mean, this is like the next move
I'm
off
like,
the floor.
dude, I was like, E-Trade, like, if you think you were safe, you know, like, or Schwab, you're like, and then you know, wake up and you're down, you know, 30%.
Oh man.
So
I
it's
mean,
pretty telltale for the market though, for sure. Like,
well, I mean, I just kind of came to this conclusion that like this is like the next shift, right? It's like, you know, all of a sudden people on the floor, like trading on the floor, got super expensive. It was like $3,000 a month, or I don't know what it was, but like up to call it $3,000 a month just to lease a seat, and that's the only way you could trade. And it's just like the cost of doing business keeps getting lower and lower when it comes to trading, but that doesn't necessarily mean that the market can be more profitable for you.
yeah.
You
And
know, so
what they were talking about, I saw on TV that I thought was true, is that these people are just looking at it from, they're fighting for margins. And this is where technology is literally going to propel the finance industry in terms of efficiency, because all of their margins are going down, right?
mhm.
Most of the banks, they relied on high ass rates for how many years? And now if we lower rates, who's taking the hit? The banks.
Yeah.
Yeah.
Hence the negative interest rates in Sweden.
Yeah. That's right.
Well,
So
one of my buddies was joking with me. He's like, well, you know, if they're not going to make money off commission anymore, what are we going to like see a 15-second ad every time you switch tickers, you know?
I know some kid messaged me and goes, well, I don't understand. That's how they make all of their money. I'm like, no, it's not. So I read that they make more money off deposits than they do trading.
Really?
Which
I
is
read
super
that.
interesting, right?
I don't know the numbers, you know. You
Yeah.
know, I've anything
Don't take that.
secondhand.
I just read it on the internet.
Yeah, it's the internet. It's not on the internet.
But it's interesting telltale for the finance industry in terms of technology is going to take over.
Yeah,
In
well,
terms of being efficient like they used to be.
I would say for the new traders out there, like just trying to learn the strategy and where should I trade, all that, I wouldn't worry too much about this stuff yet. I mean, you might be able to take advantage of some of those zero commissions at first, but I would not, long term, you want to be in a professional platform, and those are going to charge commissions. And for me, at least they're upfront with, okay, you're charging you this, and this is what they're going to make their money on. If they eliminate that, they're just going to find all kinds of weird ways to make money. They're going to want to make the money. And yes, they could still come down, but they're going to fight for that. And so let's just keep it up front, pay the commission, direct route. You know, you get all the good professional tools, and that's where you want to be. And don't chase that stupid shiny object. Oh, free this, free that,
Yeah.
whatever,
I don't see anybody offering futures traders free commissions
Yeah,
yet, so
that's
I don't
true.
even have the option.
The joke
Uh,
now is free locates, free, you get paid to trade. And like, it's just, at what point, you know,
Yeah.
a lot of them make a lot of money off locates, I know, because, you know, it's a huge cost for most people. But at the same time, you know, that can't be their only way.
Yeah, I know, Mike, you've showed me some of your locate fees, and they are a car payment in one day.
It's like the
Good.
cost of, like anything else. Trading's a business, and there's costs to it.
Yep.
Pay to play, or you know,
Yep.
you don't compete is how you have to interpret
It
it.
is. And those of you that are new out there, you'll kind of get there. But, start somewhere, start small, all that. And don't be afraid to pay a little commissions, because at the end of the day, you're trying to make, hundreds a day, and $5 or whatever won't matter.
Yeah.
On each trade. So,
10,
and also if you're being
20%.
selective and being in the right opportunities and not over trading, and Jack alluded that, I think the zero commission is going to lead to a lot of burnout on accounts and a lot of over trading.
Yeah.
Because the barrier isn't there. So cool. Let's kind of just get into just without giving out too much details, I definitely, Jackson be more involved here, and we're going to be doing some really cool, exciting stuff for the future that we're excited about. So this is our official introduction.
Yeah, buddy.
This is the launch.
Yeah.
No, I mean, I guess I'll just say, I'll speak a little bit about, I'm going to be introducing futures to the IKNK community and helping you guys kind of get up to par with, how to view them, even if you're not trading them, just, shedding another light. And in the meantime, I'm going to be learning a lot about what everything Mike does, what Robert does. And, I think, you guys can speak more to the idea of IKNK as far as being a community of great traders. And I'm here to show you guys something new that you've never seen before and help you guys learn a product that, could truly change the way you trade.
Yeah. So I apologize. I was supposed to say this in the intro, guys, that, IKNK Traders, the whole ethos of it, and which, Cameron Foose named and envisioned, was to have a group of IKNK traders. Well, here we go, right here, right? And we're going to continue to grow that. And it's not like I said earlier, this or that, or you have to do this or that. You should learn about these things. And we're going to have, and it's all about building a community of pro traders that are willing to help and out there and have experience, have a track record, and also that we like, right? So, and we hope you like.
Thanks.
And so that's what we're going to continue to do. And we're going to take that vision and we're going to run with it. And I think you guys are going to like the ride and the things that we're planning.
Yeah, boy. Jack's the homie. Me and Jack have been talking for a while. And I mean, the market, in my opinion, is the alphabet, and every different trading style, futures, options, equities, is just a different language. Mm-hmm. But you can learn something from everyone. Just like I learned a bunch of shit today that you said, Jack. And I'm like,
yeah.
While you were talking, I'm like going on my charts, I'm like, huh. Okay. So it's just going to be good for us and everyone.
Yeah. I mean, trading's one of those things, and everybody watching this has the same personality that we have right here. It's just a fascination of learning. No matter what you're doing, the product you're trading, you have to be constantly expanding your knowledge, expanding your circle. Otherwise, I mean, the market's always changing, always moving, and you gotta move with it. And you either have a desire to learn and create, or you don't.
Cool. All right, guys, that was really exciting. We'll be doing this more often. Thanks for coming. You'll be seeing more, Jack. You're the man.
Yeah, thanks for having me on, guys. I'm really excited.
Thank you, man.
Appreciate it, Jack and Rob.
Thank you, Mike.
Always a pleasure, homies.
All right, we'll see you next time, guys.
Peace.
Take care.
Bye.